Let's dive deeper into the market action with our reporters. Luke, help us out. What are you looking at?
So right now, I'm looking at what the market thinks about the inflation outlook ahead of numbers tomorrow. Tomorrow morning, we'll get CPI for November, and that's expected to show headline inflation accelerating to 2%, with the core rate remaining at 2.3% year on year. But take a look here at the market's five-look outlook for price pressures, five-year outlook rather. The teal line there is the cost of protection. The inflation will fall below and average below 2% over the next 5 years. The white line is the cost of protection of it exceeding an average of 2% over the next 5 years. So you can see any kind of rebound we've had in bond yield in terms of inflation compensation, it's really been driven by diminished downside risk rather than the risk of higher price pressures down the road. So when I look at this chart, I see two things. I see one, a market that does not believe any kind of average inflation targeting by the Fed will be something that is realized, and two, that the kind of 60-40 portfolio, your risk parity construction, is not seen as under threat if inflation is going to continue to remain at bay. Abigail?
Luke, I'd like to take it a little bit more micro and take a look at the shares of Sanofi, the pharma company. This is the GD, or graphic dashboard function, in the Bloomberg, a great way to see what's going on, a lot of what's going on very quickly. First of all, we see shares up 6.1%, on pace for the best day since 2016. This on way above average volume. Here's the 52-week low and the high. So we see the stock at the highs. Analysts are somewhat bullish here, 5 ratings, earnings per share. The reason the stock is up so much, they've announced a shift in strategy. They're dropping diabetes or new research on diabetes and cardio. They're moving more toward oncology along with rare diseases and MS. And something else about this company, Taylor, from more of a macro standpoint, they've been known as somewhat of an R&D slug, and this really kind of exemplifies it. Up top, Bristol Myers, 28% of their spending as a percentage of sales, it goes to R&D. Sanofi, just 16.5%. The new CEO, 3 months in, Paul Hudson from Novartis, he's hoping to bring that higher and really redo this company. Today, with the stock up 6%, investors and traders, Taylor, liking it.
Abigail, I'm going to take a look at the flip side of that and take a look at a stock that's falling today. Shares of Toll Brothers falling almost 5%. This is after analysts really liked last quarter's guidance, but weren't really thrilled with the first quarter guidance going forward, and particularly that adjusted gross margins. Raymond James saying that he was getting guidance of 21.3%. That is 300 basis points of a decline year over year and below his estimates of about 23.5%. Again, those adjusted gross margins continue to be under pressure. But if you come and take a look at a chart here that I'm showing inside my terminal, the stock, despite today's move, still does remain very range bound. Ever since the big spike up that we had in September, shares have kind of been going up and down in this range bound. A lot of this comes, frankly, because there's been big reports on California's soft market, which is typically a big profitable market for them. Given how soft that is, not as profitable for the company, stock continues to be range bound until they can break out of that and perhaps turn around that California market.